Welcome back. Some are calling it the retail ice age. Kohl's, Macy's, Nordstrom, JCPenney, all disappointing investors last week, and the pain likely to continue. About 1/3 of the retail industry reports this week alone. Take a look at some of the big names we're watching this week. Home Depot, Target, Urban Outfitters, Walmart, and Gap, to name a few, all this week. Joining us right now is S&P Capital IQ senior analyst Lindsey Bell. Lindsey, good to see you.
Good seeing you.
Characterize the earnings season for us so far for the first quarter, and where does retail fit into there?
Well, negative 6% growth for the overall S&P 500 index is a third quarterly decline in a row, so that's not a very good thing. Numbers are coming in only 200 basis points better than initial growth expectations going into the quarter, which is very weak. Normally, companies beat by 400 to 450 basis points. So this is the second quarter in a row we're getting a disappointing beat rate for all those people out there talking about the difference between GAAP and non-GAAP numbers. As far as retail is involved, the department stores, sure, they were really, really bad last week, but those numbers have been reset, and what we're going to come up to this week is Home Depot, Lowe's, TJ Maxx, Ross stores. These are going to be the winners. The home building stories, and also the off-pricers.
Matt Murray, how do you see it?
How healthy do you think the consumer is right now? And is the consumer really ever going to come back here, or has it permanently changed?
I don't think the consumer is as bad as some people think. If you look at consumer discretionary earnings growth in the first quarter, 20% is really good. But what's driving them is not the department stores. It is, like I said, it's going to be Home Depot, Lowe's. We're also seeing the online retailers. Amazon crushed it, right? Expedia, Priceline, those two did really well. The consumer is just spending in different areas. They're spending in experiences. They're spending on travel. The auto retailers, GM and Ford, just crushed it this quarter. So there are pockets of strength. It's just consumers aren't really spending on apparel. And we did see the retail sales number last week for the month of April by the government data. That was a really strong number on a year-over-year basis, but it wasn't the department stores driving it. It was the online retailers.
Online was double-digit. It had a double-digit increase year-over-year in the retail sales number on Friday.
Super hard question, but just your intuition, really. Is it psychology that people are holding back, or is it disposable income, or a combination of both?
I personally think it's probably a combination of both, but I think it's psychology. I think that even though the recession is, it's been a while since we've been there, 10 years, I think it's still in people's heads.
What about changed habits? I mean, do we have too many stores at this point in time as people go to online? Do we just need to pull back on brick and mortar and see some fundamental change in retail that we haven't really seen
I think
yet?
that absolutely is a part of it, because consumers are spending less on apparel. They're changing their habits of shopping. They're shopping online and not really as much in the stores. So the stores are giving up market share, and I think there's too many, and there's too many goods on the shelves, and they have to sell them at a discount. It's not good for retail.
But when you look at what Dagan's talking about online, that's really powerful. They're spending money there.
I read a stat last week. Amazon is the second largest apparel retailer in the country, behind Walmart. So they've made huge inroads. Journal today has a story about Amazon is rolling out all these private label grocery items.
Happy Belly.
Even perishable items that Amazon's starting to sell. Have you heard anything from these company executives in the earnings reports about the uncertainty related to the presidential election? Are they talking about that? Are they voicing that?
Well, I haven't seen anything on that. They're voicing the uncertainty about the way the consumer is spending. Macy's said that. Nordstrom said it. They all said it. The department stores, at least, that's who we've heard from. We'll get more this week. But I think back to the online point is you've got H&M, Zara, they're the off-pricers coming in too, and there's a lot of online boutiques that I think people are shopping at that aren't accounted for because they're not public companies.
They are pushing items and clothing at people in a way that the major department stores, they have fallen on their
value.
And prices down. Prices down.
Yeah.
You log on, there it is. You go to a website, there's your Amazon ad. If you've looked at one thing on Amazon, it pops up on whatever website you're looking at. It's a different way of doing it.
Very effective. And we got to take a look at oil as well, because as oil has been creeping back up. Hey, we're looking at $50 a barrel. Look at this, $47.07 right now. We were waiting for them to spend the money that they saved on the price of oil, and if you blink, look, it's coming back up again.
Well, I think at this point last year we were around $55 a barrel, so it's still right in that realm. But the consumer, you're right, we haven't seen them spend it. At least if they are spending it, it's not obvious in the retail numbers. Maybe it's on health care and other things.
Who did you have on Wall Street Week that thought oil was going to be way higher?
Yeah, so it was a combination of Mark Fisher and Boone Pickens, who also spoke at SALT. But I mean, they both think it's a $70 barrel at the end of the year number.
And Dan Jurgen in the Journal today says at least 50 in the fall.
50 in the fall.
Yeah.
Dan Jurgen in the Journal today. Lindsey, good to see you.
Thank you.
Thanks so much for joining us there. Lindsey Bell from